But this looks like a bullish pattern to me. So it wouldn't shock me to see Ethereum start to make a move to the upside.
In this week's Bitcoin Deep Dive, Gareth Soloway provides an urgent update on the dollar destruction plan, stocks, cryptocurrency ETH, XRP, HEX, and Poly, among other things. Gareth has been a pro trader for more than 20 years. He devoted his early professional years to the study of technical charts. He developed his own trading strategies using his own money, including the confirmation signal, three-tail theory, river theory, cycle analysis, and a keen sense of market mood and timing. Make a comment, subscribe, and like the video. See you soon.
Yesterday was looking good. We had a nice bounce. The dollar was falling a little bit. Today, the dollar started to gain strength and it just smoked Bitcoin. And let's be fair. I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. And that's really what this is at this point. I mean, you look at the dollar, the DXY, and you can see this inverse relationship. And that's not the DXY. There we go. So this is the DXY. It's been in this channel. You see we hit it here. We pulled back. We're kind of just chopping sideways here. You could make a case it has a double top, but it does concern me that there's still a chance the dollar could pop one more time into this upper band before it starts to come back in. So again, you know, Jerome Powell, he was out there on last Friday with Jackson Hole, and he just smoked the market by basically being extremely hawkish. And that we saw Bitcoin drop. We saw the stock market take a massive dump as well. And this is a market, again, that is worried that, number one, Jerome Powell is going to push us into a steep recession. But number two, they're also worried. They want the free money. They want the drugs, right? The drugs was just printing. Yes. And the Fed is talking a tough game right now. Okay. Now, this is the gold chart. And what's amazing about the gold chart is, number one, it's still the best performing asset between Bitcoin and the stock market for the year. I think it's down about 4% or 5% on the year. But basically, look at this trend line. Pivot high, pivot high, pivot high. We broke out. We tested this line again. Now we're testing it again. I think gold's a buy here. I think you're above this line. I think you're going to start to head up. You could even be forming maybe an inverse head and shoulders here if we start to trade up. And again, I like gold here. I think it's a good play. It tells me that the dollar may be topping out. And by the way, that's another important point to make here. So think about this for everyone watching. Last Friday, Jerome Powell, probably the most hawkish he's been ever, right? I mean, it just crushed the market. NASDAQ was down 4% in a day. That's a huge move. And everyone's like, oh, he's so hawkish, they're going to raise by 100 basis points. They're going to continue to raise. Well, go ask the bond market if that's true, because the bond market is the biggest, smartest investing market out there. And you know what yields did on Friday? Nothing. And what that tells me is the bond market is calling Jerome Powell's bluff and saying, no, we don't believe that they're going to be able to raise that much more. And if we go to the 10-year yield, here we go. This is the daily chart. We're not even back to the highs from June on the 10-year yield. That's calling Jerome Powell's bluff and saying, we don't think interest rates are going to go much higher from here. Again, I still think 50 basis points in September, maybe another 25 later in the year. I think that's it. And I think the bond market's confirming that. Yeah, so oil has broken some key levels to the downside. I think, you know, months ago we were talking about when oil was $125, $130 a barrel. I said, hey guys, it's not going up. It's going to fall. That's exactly what it has done. You can see here was your Russia invasion. And I love showing this chart. If we go to your weekly chart, actually, let's do the monthly. Look at the perfection of this. So if you connect this low to basically through here and through this low, and then you do a parallel line to this high, look at the high on the invasion. I mean, talk about the charts just dictating the max price and telling us that. You had the pullback, then the bounce, and then we've seen oil coming down. I still think oil comes down even more this year. In fact, if I throw up a trend line, this is my target on oil by year end, which is about $75 a barrel. So, you know, you're looking at more downside here. Doesn't mean it can't bounce a little bit. But for me, if we get big enough bounces, I'm shorting oil. All right. You can't tell me that if the economy is slipping into a recession, and if we're going into recession, then Europe's going into recession, then I mean, everyone's going into a recession. And you can't tell me that demand for oil is not going to fall. At some point, you're going to see some resolution with Russia as well. In addition, let's be fair, Russia's selling all their oil anyways to the open market. They're just selling it to China and India. But I will say this is that overall, I do think midterm you're going much, much lower, but short term, I actually think you're getting close to some supports on the S&P 500. If we take a look at the chart here, so number one, look at the high. I mean, this is where charts, Paul, I mean, I'm a chart guy. How do people not look at charts? I mean, connect this top here, which was the all-time high, to this, and it gave you the exact high of this huge bounce. Not only that, but throw in your 200 moving average, and look, you went right to the 200 moving average right here as well. So I think that's remarkable. And the question is, as we're falling down here, where are we going? I think this is where the S&P is going to go short term before a bounce, right around 391 on the SPY. We'll probably bounce there, maybe coincides with a dollar decline. And then I think the next leg finally takes us down and takes out those lows. I still have a target on the SPY or the S&P 500 much, much lower, basically the pre-COVID highs. So I think the pre-COVID highs, we have to revisit that. I don't know if it'll be by year end, but I think it's very likely by year end or early 2023. Yeah, so we could do Ethereum to Bitcoin. Sure, absolutely. Let's see what we got here. So, and again, I don't usually look at this chart, so this is going to be the first time I'm looking at this chart. I usually look at it in terms of dollars. But basically what you can see is you basically got this almost pseudo triple top up here. And now what's intriguing about that is that triple tops, the more you hit a level like this when it's a triple top, the more likely you get a breakout. So what this could tell us is that you might see Ethereum versus Bitcoin actually make a big move here. Maybe that coincides with the merge. We'll have to see, but it certainly is an interesting chart here. And you could even argue that you have this lower channel as well, right from here. So you have a kind of a pivot low here, and then over here, you kind of pierced it before this recent move. But this looks like a bullish pattern to me. So it wouldn't shock me to see Ethereum start to make a move to the upside. Right. So basically XRP, we're still waiting on this elusive judge ruling, which, by the way, I mean, how long is this going on? I mean, it's been like almost a year, I feel like it at this point. But basically what you have is you have the chart telling you that something is going to come out probably in the next month or so. The reason why I say that is you have this massive wedge pattern, and a wedge comes to a point, and when it comes to a point, price either has to break out or it has to break down, one or the other. And right now you're just hugging the lower end here on that chart. So you want to see you want to see Ripple hold the 31 cent level here. If it breaks down, that would be a negative. That could imply a negative judge ruling. If it's able to rally up and take out, then you got the positive side. So basically, a wedge pattern is telling you price has been consolidating. We know that from the chart here, and it tells you that at some point here, when the two lines merge together into a triangular point, you're going to get a big break one way or the other. Let's take a look at BNB, Binance. Yeah, Binance is not a horrendous chart. You have broken below this kind of upsloping channel, but if you look at how far off the lows it is, that's a really nice move off the lows. Now, again, I still wouldn't be a buyer until it probably gets down to like 245 or so down here. But again, I like charts that as we're seeing Bitcoin come down, getting close to its recent June lows, they're holding well above. It shows that relative strength. And if you get a bounce, those should be the ones that perform the best.